Okay, welcome everyone. Welcome to the Hurley Investments Market View commentary for Valentine's Day on the, let's say, year 2022. This is going to be down and dirty. We're going to get this done in a half hour so that way significant others aren't angry or frustrated. But I'm going to try to make you think. So I'm going to go through quite a few questions. Question number one. With looking at Disney's earnings, and this is probably going to be what's going to come out for Kiev on Thursday. Looking at Disney earnings, what type, how would I say this? What kind of trades would you be putting on Disney after the earnings that they had? Blowout numbers. After hours, they were up at 160. But I want you to think, what kind of trades would you put on Disney after their blowout numbers? So William comes up. I would buy the shares. So William, I'm going to ask you, why would you buy the shares? I'm looking for a little bit more than that. Why would you buy the shares? Some people are quiet on Valentine's Day. What would you guys put on Disney? Remove puts and let it run. Ooh, I really like that one. Anything bullish because it had great earnings. That's also an excellent one. Protection by shares and so someone's saying put a little protection on and let it run. Okay, so here we go. First and biggest question we have coming up. Looking for a date. When will Russia invade Ukraine? When will Russia invade Ukraine? Wow, that's funny. I got not sure they will. I've got not sure, but they will soon. So, Bill, why are you not sure that they will? And William, why do you think they're going to invade soon? I love it. Same day as the Fed will open its mouth. Wednesday, if not posturing. Any other thoughts? So, to move the supplies for 100,000 people, huge. In fact, from a military point of view, they really will invade in the next 10 days because they have such a supply chain to handle. So if it's going to do it, it needs to happen in the next 10 days. A lot of people said they would do it after the Olympics, right? I don't know why they'd wait after. But with the forces moved, usually you got about 2 weeks of supplies. A supply chain would say 14 days from when all the forces were there, which gives them about 10 days from today. 10 days from today, without having to do a huge restocking for food and so forth, we have 10 days to get it done. Does anyone feel comfortable without having puts or protection on their shares of stock? Is there anyone that says, you know what, Kevin, we're good. We don't need protection. Does anyone feel that they're okay where they don't need protection on their stocks? So I had 2 no's. So obviously we want protection on for right now, which is what we did and what we went to on Friday. On Friday, whatever wasn't protected, which was Bank of America, we got our protection on. Apple, we got our protection on. Baidu, we moved our protection up. We kept our 150s on for Apple. I think Ford, we added protection on. We moved Baidu's protection up. On the shares, we put the protection on, and we were good to go. That's what we were doing. Now, Disney had some killer earnings. I mean, ridiculously good earnings. But we ran into a problem with Disney. What is our problem with Disney? What is our problem with Disney? So Maud actually kind of stated the obvious. She's like, Kevin, the rest of the market's going down. Low tide sinks all ships. I'll agree with that, but what else could be wrong with Disney right now? What are your thoughts? I like it. Kevin, we're at a resistance level. In fact, I'm going to highlight it right here. We basically went for 3 weeks. For 3 weeks, we hit a 160 resistance level. There are a crap ton of orders stacked up at 160. It went up to it almost to the penny after earnings. The good news is we have support, and the 50-day sitting right at 150. Today was a huge day in the markets for Disney. Reasons why? Well, first, the market was down almost what? 0.39, 0.3%. Dow Jones is bearish, broke below the 50. So we're probably going to head down and test some lows again. And those lows are going to be looking at 3,400 to 3,380. If we look at the S&P 500, broke the 200. Expectation. We're going to go back and we're going to test 4,300 range. The neat thing is it'll create a double bottom, which will give us the opportunity to go higher pending the Fed raising rates in March. And then obviously on the NASDAQ, doji today, but I would think the NASDAQ would come back and touch that 13,400 level or the 13,330 level. So that would be the expectations on the market. Now, Disney, I haven't gone through their numbers yet, but we also have one other problem with Disney. What's the other problem with Disney? And it's not ESPN. That's funny because Maud and Mary, you both were going to say that. All right, I got a couple question marks coming in. Streaming service, yes. I haven't gone through their numbers, but Stephanie Links or whatever on CNBC said they're still bleeding money from their streaming service, which I don't understand because it seems to me that their product and their movies are already made. So I'm not sure how they're losing money on their streaming service yet. I definitely need to go through and work their numbers. But I'm all in on Disney. I think they're pretty good. All right, let's see here. Briefingpicture.com. Very interesting. I highlighted something because banks were down today. And yellow there, some argue that these coming interest rate hikes from the Fed are already priced into the stock market. There's some truth to that, but from our vantage point, it's only a half truth because the rate hikes haven't happened yet, which is to say they haven't hit the economy and corporate earnings. I also was rather surprised today because banks took it in the shorts. Jefferies downgraded JP Morgan to hold a higher expenses. Sorry, can't read. I got my stuff in the way. Jefferies downgraded JP Morgan to hold as higher expenses could hold back the stock. Yet they clearly state, which I think is kind of ridiculous, rising interest rates are seen as a positive sign for banks. It's the yellow there, as it is easier for businesses to grow their net interest income when rates are higher. However, it's expected slowdown in other parts of JP Morgan's business may offset that. The next paragraph, JP Morgan is well positioned for higher rates, which will lead to improved net interest income growth. But tough comparisons in many fee businesses will work against the grain, especially with the large increase in expenses planned in 2022, $77 billion, and potentially higher beyond. Once again, I don't understand the analysts. We're downgrading them from 180 to 155 because they are well positioned for higher rates, which will lead to improved net interest income. But tough comparisons in many fee businesses. I just don't get them. I don't understand them. I don't understand where, yes, Bill, where the stupidity is. I've never understood analysts. Their analyzing of what they're doing is not making sense. Here we just talked about, and we've talked about it here for weeks now, right? Rising interest rate environment, we want to be more into the banks. Here we have the analysts, hey, it's even better. In fact, they're better prepared than most to make even more money in a higher interest rate environment, which will lead to improved net interest income. But we're going to downgrade them. They also downgraded US Bank Corp. They downgraded Zions Bank and Commercia. I don't know what that one is. But again, I just sat here and I had to be honest with you. I'm like, my goodness. Some people are just dumber than dirt. All right. I found it interesting that at least on the briefing.com, they argue that interest rates are not baked in only because they haven't hit the economy and corporate earnings growth. And all it means is higher interest rates mean it makes it harder to borrow, and that they have to charge more for the material goods and making their products. Who will this not affect too much, so to speak? Cash-rich companies. Anyone with a cash-rich balance sheet is going to be in great shape. Someone asked me, Kevin, why haven't we bailed out of Facebook, right? Why haven't we just said, Kevin, we're done. Let the puts call away the shares. We're good to go. Pretty interesting to see how the metaverse is being used right now. Dave Ramsey spent $150,000 on the meta universe. Shaquille O'Neal, $250,000 on the metaverse. I believe Eminem spent $100,000 on the metaverse. It's amazing where people will spend real money for fake property, for fake things. I'm not one that spends money to buy more coins on games on the phone. It's just a game. But what is it? User Player One or in-game? I don't know what it's called. It looks like this is going to be the future. As so much. Ready Player One, is that what it's called? More money than brains. I love it. I found it interesting just how much money is going into the metaverse on China's side, where they might have their own Chinese metaverse full of all their Chinese words or what have you. They think it's going to be an $8 trillion US dollar, $8 trillion opportunity. When people ask me why I haven't bailed on Facebook, they're still profitable. They still make a lot of money. They're putting money into something that apparently has an $8 trillion valuation down the road. If Snap can figure out how to work with Apple, Facebook's going to figure it out. And I like the way it was said here. Obviously, Zuckerberg has more money than brains. But what a huge opportunity it's going to be for Facebook sometime down the road. Where are the markets in this week? I'm going with lower. I'm just following the trend, and I'm thinking that we're going to touch those lows to create a double bottom, which we could go higher until we have the rate hike. And I believe the rate hike, I should check, but I believe the rate hike is what, the first week or second week? Let's find out. Pretty sure it's the second week of March. FOMC rate meetings schedule 2022. March 15th and 16th. That is what we're looking at. So middle of March, I believe once again, we've got to have protection on because the market will most likely overreact. Cy asked, should we get in on Chewy? They have a real chance to take share from Tesla. I don't think so because what is Chewy's CHEW? Is that their ticker symbol? There it is. CHWY. Chevy, excuse me. So Chevy is GM, right? And it was interesting because someone asked me this earlier. So let me go to what was answered here. Bill asked me this earlier, and it was really a great commentary. Here we go. So here was the question. Good morning. So with the push to EVs, electronic vehicles, no, that's me. Where is everything? All right, so here we go. Here's what I got at like 6 o'clock my time today. Kevin, after seeing and hearing many ads, I ponder about the future. Since your job is always trying to guess what will happen in the future, I thought I'd run my thoughts past you. Of course, if we could predict just a minute or two ahead, we'd all be rich and we'd all be at the racetrack or in Vegas. All the ads about electronic vehicles. Seems that every automaker is pushing their electronic vehicle. Should investors be looking at battery makers, battery recyclers, or battery disposers? It may be like the battery tools. If it doesn't work, throw it away, buy a new one. It's cheaper than buying a new battery. Also, the ads about crypto. There was a time that I thought it was unreal that we would become a cashless society. Credit cards are now pay by phone. Are we all really going to be using crypto? Question mark. Rick Edelman claims that it makes sense that we should be dealing with crypto companies. Bitwise, I think, was one. Just some pondering thoughts. To where my response is, so it says, good morning. So with the push to EV, I've kept us forward for the most part. Why haven't we looked at batteries? Batteries have been the main problem with the cars. Only Tesla has a halfway decent battery, and no car actually goes more than 160 miles per charge. Why? AC, heater, radio, lights, etc. all drain the battery and lessen the mileages the cars get. Also, batteries have next to zero profit margin as they are trading and have been traded like a commodity. About cryptos, I put 5K into 59 different cryptocurrencies, coins, tokens, NTFs, and I'm down 30%. I actually did this about a year ago. There have been a couple that have completely disappeared, a couple that have been stolen, and I will never see the money back. If you ask me, the risk is too great. In my neighborhood, I have a $1.3 million wallet that was stolen, and he is never going to get his money back. I just don't see all the opportunity with all the risk that's involved. My suggestion is maybe to open a Coinbase account, put 5 or 10K into 50 or so different cryptos, and I meant tokens and NTFs, the whole 9 yards, and just let it sit. Maybe one will take off and you could be filthy rich, but I would expect we'd be a net loser over the next 5 to 10 years. Just my feeble attempt to predict the future. I just don't see it. In fact, out of all the car companies that are coming out, Ford right now seems to be the best one in regards to where I think we're going to go. All right, guys, is my sound okay for you? You guys able to hear me? Type in a yes just to let me know, please. Okay, Mod, I'm going to get to that in just a second. Market perspectives. This was by our favorite company, Vanguard. Here are the growth rates that they're expecting. I'm just putting them out there so that you guys can hear. Jim, everyone seems to be hearing me okay, so that might be on your end. Jim, so it sounds like that might be on your end. Everyone's hearing on our end okay. All right, so I'm just sending this out there so you guys can see it. What's really important to understand is right now, all of the fixed returns are expecting to go up. And to go up where they're at least going to double, if not be 150% more interest paid on the coupon, on those coupons, than they are right now. So if you don't get out of your corporate bonds, your high yield bonds, your treasury bonds, if you don't get out of bonds now, it's an inverse relationship. You very easily could see the value, the par value, the $100, $1,000, $5,000, $10,000 bonds you have, the price be cut in half. They're not going to be tradable. That doesn't mean you lose your money. You just have to stay in it for the life of the bond so that you can get back your dollar figure. But they're not going to be tradable. They're not going to be available. They're going to actually be a net loss on your account. It's a paper loss. You won't lose any real money unless you get out of them. Otherwise, you stay in them for the 10, 5, 30 years, whatever you hear, and you're going to be good to go. But if you're in bonds right now, expect their price to literally lose somewhere between 20 to 50% because the coupon rate will pay so much more. Very interesting article. Make sure you read through when we get this posted tomorrow, and it will probably be tomorrow evening, so I'm not giving this to David until tomorrow to have him work on it. Read through this one. China's tech giants push towards 8 trillion. I already went through that one. Where's the next one? Interesting growth stocks. As I went through it, I really just was thinking, okay, I'm going to put this in here because it shows that there are some companies that are going to go higher, even with interest rates going up and even with not a huge cash hoard. So you're going to need to pick and choose a little bit more, a little bit better. There's some dividend expanders. A really interesting article on looking at some stocks that are going to pay some higher dividends. I only put in here because most, if not all of these, are outside of energy. So here you're looking at higher dividend paying stocks, and not one of the top 5 is in energy. I can understand Amogen because it's pharma, biotech, financials, Blackstone and Ally Financial. Maybe they're going to do better on their rentals. Whirlpool, really? Consumer durables? American Eagle Outfitters? Pretty interesting to see where some growth can come that no one truly knows. And then I just had an interesting article on how one side hustle made $141 million. That's going to be pretty easy. Okay, so here, someone asked a question here about Under Armour. What do I think of Under Armour? I think Under Armour had a great earnings. They just weren't rewarded. And for the most part, some puts put those shares to people, and we're looking to get into Under Armour really closer to a $17 mark, or we're going to cash in those 1850 puts for those of you, and we're going to put that money to work and get in more shares at $17. So right now, we're still a believer in Under Armour because none of the fundamentals have changed. We're just working on things a little differently for some people. Some people shares got put away and we're looking to get in. Some people are still holding on to those 1850 long puts that are out a little bit farther in time. I actually think there's some people that don't have puts on though. We got them off down around 1725. So we're just in the crosshairs on it, but I would think 17 would be the bottom. When someone asks me why would I believe that or why would I say that, it really comes down to going a little bit farther out in time. And actually, we could use it right here. At 1752, again, very easy reason to have a double bottom and then off. But off would only be back up to 20. And obviously, there's some sell orders stacked up around there. Any other questions? Because if they're not, I want to wish you guys a happy Valentine's Day. And I'm going to go spend that time with my wife. Yeah, so that is a good question. William's like, you went over some things, but you didn't. For this week, monthly options expiration on Friday. We have PPI numbers tomorrow, which I'm also trying to keep protection on for that. Really, Wednesday and Thursday, we should be okay with our economic reports that'll move the markets roughly higher. NVIDIA reports on Wednesday, Win reports on Tuesday, and for us, Baidu is the big reporter on Thursday. Guys, I don't see other questions coming in. Please have a wonderful Valentine's Day. Go treat that other person with a little bit of love. You guys should have all received the coins that came out. That's my Valentine's / Christmas / New Year's gift to you. Perfect. Guys, have a wonderful, wonderful evening, and Keith will be with you guys Thursday morning. Take care, everyone. Bye-bye.